solutions to the ever-growing popularity of private investment as well. Drew Miyawaki joins me from Westwood Group, Director of Managed Investment Solutions. Drew, great to have you here.
Hey, nice to be here. Thanks for having me.
It's a cool spot, right?
It is cool. Very
Chicago-based.
cool. Love it.
Tell me about your kind of priority, your goal right now. You're an index expert. You've spent your career creating indexes, bespokes, I guess, kind of construction of what people want. Where do you find the most demand right now?
Yeah, the team and I have a long history in indexing, and we really like to get into the weeds of the design of the methodologies, and that's what we think that investors are really focusing on these days. You know, they like a lot of the things that indexing brings to the table. We are very strong believers that none of this is passive, and all of these decisions that you're making are active decisions.
The moment you start putting stuff together in a basket,
you're making choices,
right?
You're making active decisions, and you should be well informed. And so we like to be very consultative with our clients and our prospects, and really walking them through that journey of deciding what kind of outcome they're trying to achieve, and then helping them design the methodologies and the products that fit that best.
That brings you mostly to ETF providers, issuers. Who else needs custom index solutions?
We've seen it from family offices, institutions, and now that the technology and the data is supporting it, individual investors can have that flexibility and that choice as well.
Okay. So they might have a specific portfolio that's geared a certain way, and they say, hey, give me something that I can slide in here as like a Tetris piece, that long Tetris piece?
Exactly. They can either use this to replace existing products that they took off the shelf that didn't necessarily fit what they needed to at that time, and they can help design that for the future, or they can use this to fill in holes and gaps in their investment portfolio that they need now.
You mentioned to me before that I thought was something we should definitely hit is the complement to the private investment boom that's happening. Kind of take me from the top. What is your thought about that generally, just sort of as someone who's been in the market in some roles that I think kind of hit the nature of where a lot of people are thinking about private stuff. It's hold down the line. It's advisors. It's individuals. It feels like this whole asset class, it's moving its way into everything right now.
That's right. Yeah, one of the great things about the role is that you get to go out and talk to clients, and rather than be product pushy, you sit back and ask, what are you trying to solve for? What we've seen recently pick up a lot of steam and a lot of traction is that investors, again, the biggest investors down to some of the more retail and individual investors, have really started to allocate towards private investments, private equity, private credit. And they're very happy with those returns, and they're happy with those exposures. What they're starting to worry about is what happens when there are liquidity needs. And sometimes those investments that they've made aren't the most liquid. They aren't the most dynamic to move in and out of. And so that concern has been popping up. And so, the team and I have been working pretty hard recently on developing solutions that help solve for that problem. So Can we create you a portfolio of liquid public equities that look and feel like your private investments?
Okay.
And that's getting a lot of attention lately.
That's a fun concept. How close do you get? Because then it starts to bring up a lot of questions, which is, well, if they're very similar to them, then why have the private version at all?
Well, yeah, they are a nice complement, and they're a complement in the times that you need to draw down and you need to access that liquidity.
So it's like a close enough type of thing.
It's close enough. It looks and feels like it, and what you want to do is help define those sub-asset exposures. Is it real estate? Is it energy? Is it infrastructure? Is it natural resources? Yeah. Do they have the same characteristics of the private investments, but in a public equity form? So they are liquid. They can be valued in real time, and they can be flexible for the investors when needed.
Do they count as technical? I don't know if this is does it count as collateral? Is it similar? Like, is it effectively collateral, or does it meet some definition of that?
Well, if you think about it, if you have a private equity or a private credit fund or an investment, and you want to leave 10-15% in a liquid asset like cash or treasuries, that's not the exposure that you're aiming for.
Okay.
This can be that exposure, help be closer to that exposure, rather than just a simple cash instrument.
Where do you find, if we can get a little bit more granular, where do you find as private assets make their way into the advisor world, et cetera, is there a certain vertical within that category that you find yourself hedging the most? Or is it energy? Is it real estate? Is it
Westwood is a pretty interesting firm. It does have a very strong pedigree in energy. So we have a lot of experts on staff on the energy side. Infrastructure seems to be one of those subcomponents that gets peeled out on and stands on its own for the most part, though.
Let's talk ETFs. I want to make sure I hit your guys' fund that launched a couple months ago in the spring, BFRE.
Yeah.
Read as Be Free.
Be Free.
Which is in the vein of what some have kind of tried to target as the anti-authoritarian sort of like freedom kind of investment.
Sure.
Eliminate the countries that are doing bad things.
Pro-democracy.
Pro-democracy.
Yeah.
And I'm like, democracy is kind of a sliding scale.
It is, and that's the scary part. Is democracy is receding globally, in our country certainly as well over time. There's experts out that measure it. So some of the more well-known firms out there, Freedom House, the VDEM Institute, Economic Intelligence Unit, these are experts in measuring democracy. They all pretty much agree that that statement that I just said is accurate. That global democracy is receding.
What's in that? How do we make that sausage? What's in there? Is it like, how many political prisoners are in? Is it pressuring the Fed, getting involved in the central bank?
Checks and balances, free markets, human rights, voting rights, judicial process. There are a lot of different layers to that, and a lot of details that go into those categories. So Freedom House is a pretty interesting one. If you go on their website, you can look up any country. You can see what their internet freedom is. You can see what their electoral freedoms are. You can see, do they have freedom of press? Do they, student rights, human rights, again, voting rights, lots of different components to democracy.
It's a fascinating concept. I guess the one way I don't know if this follows, but my kind of logic is the most free markets, I'm a capitalist, the most free markets are going to generate the best returns. But I also believe that then money goes where it's treated the best, as they say. So if everybody's getting less democratic, but then there's one that stands out as the most, why not just invest that one if the money will find its way there eventually?
Yeah, it's an interesting concept. By these measures of democracy, some of the best democracies globally are in the Scandinavian markets, and so some of those companies in those markets are very, very attractive. But if you need to be closer to that market cap weighted index, then you can't obviously pile all of your money into just one or two or three economies.
Fair.
So you need to be broadly spread across, and you need to keep your tracking error tolerance in mind. So again, talking to these customers, talking to these prospects that have these issues, one of those themes that kept popping up was the idea of Chinese divestment.
Right.
That was a big concern. And so we started working with another interesting firm called TOBAM, TOBAM. It's a French research academic manager that specializes in this strategy. They've done a lot of research on this topic, and they said, well, why stop at China? If you're worried about China being authoritarian and you want to get that out of the portfolio, then perhaps you should consider Hong Kong. And there are other markets that also operate in an authoritarian or non-democratic fashion. Shouldn't they be considered as a risk to your portfolio?
I could kind of see where this stems from a French way of thinking. I wonder where France ranks on the list.
Well, France is a democracy, and so as you tilt away from authoritarian exposures, this is at the country and at the stock level, then you obviously will lean into more democratic nations, and that will be the U.S., Western Europe, Canada. The
last thing I'm wondering is, and we're out of time, but because this is a super interesting topic, kind of blending these things, but doesn't it take a long time? Like, how do you back test eroding democracies? Like, that's pretty tough.
Well, again, one of the things that we've seen over time, and especially in indexing, is that emerging markets, the countries that fall out of emerging markets are almost exclusively authoritarian. Okay. Very rarely do you see a democratic market fall afoul of the global rules of engagement and come out of a global index. So we just saw it most recently with Russia. Russia was a stable market until it wasn't, and now it's uninvestable in the eyes of most global investors. And so in indexing, some of these large index providers, they decide the fate of these nations. They get to say if you're a developed market, if you're an emerging market, and if you qualify at all. The markets that usually get locked and then eventually removed are almost exclusively authoritarian. And that's why if you're going to make these long-term bets, we would think you would want to bet on democracy and not the other side.
Yeah, the combination of how everybody's doing on that front. Very cool stuff. Very interesting. Drew, thanks a lot.
Thanks for having me.
Pleasure to meet you. Good to have you. Drew Miyawaki, Westwood Group. All right, we're going to come back, look at the risk radar, get Charles Moon in here from Prosper Trading Academy, which means we're probably talking some crypto and some momentum trades. Be right back.